Good morning. I'm Pete Najarian. This is The Take on this Thursday morning, a little bit brighter than some of the other mornings that we've woken up to and started the day off. But yesterday, not so great. 52-week lows in the Dow, in the NASDAQ, S&P, all of that getting absolutely hammered again yesterday. We'll see how things unfold today. So far, so good. We're off the early morning lows, at least. That's very good. And actually, in some cases, getting into positive territory. But yesterday, the Dow getting absolutely hammered again, pulling back. Yes, 52-week lows. We hit all the way down there. We didn't close on the lows of any of them, but we did close fairly close. Dow was up down about 325 points. NASDAQ down about 370. Looking over at the S&P 500 as well, breaking underneath that 4,000 level. I'll tell you what, over time, let's just always remember this, folks. A lot of flack was given to Mike Wilson from Morgan Stanley. And he said that he felt like this was the direction that we were going and that we would hit new lows. And he had projections out there and he got hammered on those up days. Well, now that we've actually reached some of the levels that he's been talking about, and I don't know that he thinks it's done, but he certainly has been a lot more right than so many others that have been trotted out day after day after day with different other philosophies on why the markets should be going to the upside. So we'll see how that all, kind of unfolds. But I got to tell you, Mike Wilson, Morgan Stanley, actually had a great call, and he was on top of it and talked about being patient. And I think that's really important because a lot of the folks who say, well, I'm all in and all this kind of thing, being too early is being wrong. And I think that everybody would admit that. And that's all part of the world of trading. That's why sometimes you've just got to be very, very cautious and kind of hold back on some of the things that you're not comfortable with. And that's part of what the navigating these crazy markets is all about. So looking at the volatility index yesterday, we would have expected it to be a little bit higher. We did get a lot higher on the VXN, that volatility of the NASDAQ, but on the VIX, kind of interesting. 32.5 is where we closed out. When you look at the actual movement, it makes a little bit more sense. Now, let's remember that at 32 on the VIX, the S&P 500 is supposed to be moving 2% each and every day. And was that accomplished yesterday? All of these things are all big factors that go into things. Volumes yesterday, very strong, little over 44 million contracts trading yesterday. Only Apple and Tesla over that million mark in terms of contracts. Apple almost 1.8 million contracts. Tesla about 1.3 million contracts. So very, very active day, no doubt about that. Crude kind of hanging around. We talked about bouncing, and it did. It bounced off that 99 level, immediately back up. And here we are sitting right around that 105. And then I look over at the 10-year. Everybody had it around 3. We've been talking about it sitting there holding around 3. It's not far off of 3, but we did back off. And yesterday actually finished up about 2.93. So underneath that 3 level, and we'll see how things play out over the next few sessions. You don't want to just rate everything off of just one movement or whether that's up, down, or whatever. But we know that it's been in a fairly tight range, although we did have a pretty decent jump up when we got up towards that 3.2 area as well for the 10-year. Now, energy yesterday, up about 1.5%. It was all the big boys taking care of business yesterday. Chevron, Exxon, Conoco, throw in a Suncor, throw in a Petrobras. All of those having a very, very nice day. What wasn't looking so great yesterday, and what really hurt, especially if you're part of the Cathie Wood stock, when you look at a lot of these, the ARK-F, the ARK-K, a lot of the different ARK ETFs that are out there, a lot of those names getting absolutely hammered yesterday, down about 3.5% for consumer discretionary. It was Tesla, it was Amazon, it was HD, it was Lowe's, it was Starbucks, it was Target, all getting pushed to the downside. 3.5% for that particular sector. Then I look over at technology, down nearly the same amount, almost 3.5%. The big boys contributing there. And then we were looking at Microsoft and Apple and Facebook and Amazon all having a pretty rough day, and Apple losing the crown as the highest stock in terms of market cap. That was given up yesterday because of that push to the downside and that continued push even that we're seeing a little bit of today. Financials down yesterday about 1%, not too heavy a selling, but it was Citi. Citi certainly led that charge to the downside, along with Wells Fargo, Goldman Sachs, JP Morgan, everybody kind of contributing, but Citi definitely falling the most yesterday, getting a little bit of pressure. So what was really working yesterday? Not a whole heck of a lot. Electronic arts, that was something that was started off the day pretty strong, finished the day pretty strong, stayed in positive territory. We did have those beta energy names that certainly were running to the upside, names like Baker Hughes, and throw in Hess, Marathon Oil, throw in APA, and then throw in a little bit of Mosaic in terms of some of the ag play as well. But where we were seeing those hits, I already mentioned a lot of the names, so we don't have to go over all those. But you've also got Etsy, you've got Moderna, you've got Whirlpool, you've got Lucid, you've got CrowdStrike, Zscaler, those kind of names all getting hammered to the downside. And I mentioned some of the financials. Signature Bank is another one of those that definitely on the downside in a much bigger way than a lot of the other names within the financials. Now we jump into today. Down about 150 early on, both the NASDAQ and the Dow. Down about 300 early on for the Dow, down about 200 for the NASDAQ. But we started to shift off of that a little bit. We actually got into positive territory. Big reversal there, about a 300-point move already in the Dow, in the NASDAQ, off of those lows and actually getting somewhat into positive territory. Now, the Dow's been bouncing around. Last I looked, it was down about 40, 50 points. But I was looking at the NASDAQ up 50 or 60 points. So in either case, we're seeing a lot of movement once again. We started off the day getting hammered, and then a little bit of buying started to come in, and we started to get that little move to the upside. Crude holding about where it was, 105, 106 is sort of the area where we're finding that. Bitcoin, a lot of people talking about this one. A lot of pressure been put on here. We're talking about underneath 30,000, underneath 27,000, really getting hammered, and a lot of those hitting the X6. As a matter of fact, we were talking about Coinbase the other day, big, huge miss. Big, huge selling, and that continues today. At least early on, we were seeing some selling there that was very, very heavy. See if that continues. We did have that put buying yesterday in Coinbase, so we'll see if that's something that does play out as well further on into the day. When I look at the volatility index, yeah, it's kind of hanging around, call it between 33 and 35. And last I looked, we were trading about 33.50 on the VIX. Makes about sense right now, given the fact that even though a 300-point move sounds like a lot, and we look over at the S&P, which is where the VIX is measured, it's a movement, but we're not quite getting that 2%. And I think that's the reason why we're kind of holding right there. And a lot of the emotional side of it is why we're actually still holding at these levels. A lot of people keep saying, hey, we need to get to 40. As I pointed out on multiple days, the VIXIN, the NASDAQ volatility index, that has been over 40. As a matter of fact, it's closed over 40 now on a couple of occasions. So keep that in mind as well. PPI numbers came out today. That was something that definitely stood out. That was part of the reaction, I think, in the markets, at least early on. Year over year, the April, that was up pretty significantly. If you look over month to month, up about 0.5% or so. So still some concerns, obviously, by the reaction, at least early on, that we'd seen from some of those numbers that were put up there. Technology started off under big pressure. Then it started to reverse. And as a matter of fact, it down more than 2%. Last I looked, it was not quite to flat, but it was off of it. It was 2%, then 1%, and it was getting a little bit more improved. Consumer discretionary, that definitely flipped around, specifically looking at Amazon and Tesla as names that were getting hammered early and then started to make that flip, and throwing a little bit of Home Depot in there as well. Consumer discretion was down nearly 2%. That flipped all the way around and was up more than 1%. Last I looked. So a little bit of a flip there. Financials flipping around a little bit as well. They were down 1.5%, down about 0.5%. You know all these moves, but we all know this. Things can change 10 minutes, 15 minutes, half hour. It's amazing how fast things can change. Only sector that started in the green today was the staples, and they've actually built upon it also. So even though that's oftentimes viewed as the area of defensive, a lot of people want to go there. Well, even though the others had all turned, you look at technology, you look at financials, you look at consumer discretionary, with that turn, yeah, the staples still continued to move to the upside. So they were, last I looked, they were up about 0.6% or so, moving and having a pretty decent day. So what names were actually starting out the day pretty good? Well, it was Tapestry, it was Dollar Tree, it was Kroger, going a little bit defensive probably, Walmart, then a little bit of 3M. Those were sort of the positive areas. What didn't look all that great, at least early on. I'm looking at GM, I look at Tesla, I look at Ford. Now, Tesla did make a huge reverse from highs to lows, or lows to highs in this case, about a 70-point move already today within the first hour. Throw in Freeport Mac, throw in a little NVIDIA. all of it, which had a little bit of pressure early on, some of that probably getting relief off of that. But at least early on, you also had some of those Chinese names. We bring them up all the time, but Netties and PDD and JD and those kind of names all were in negative territory to start off the day. Throw in Apple. We've actually even seen a little bit of put buying, believe it or not, in Apple, which is something you don't oftentimes see. Look at Salesforce, Microsoft, and of course, Disney with earnings. But that stock has been all over the place. Post earnings, it got up to 109. Then as we got through a lot of the conference call, everything else later in the evening, got underneath 100. And last I looked, it was trading, I believe, right around 105 or so. So don't quote me on that one, but I think it was right around 105 or so. So we've had a lot of movement in Disney and a lot of pushing and pulling, and what really matters most and where the revenue is coming from, what the subscribers look like for a lot of the different things. There's so much going on to unfold there that it's definitely something to keep your eye on. Speaking of earnings, Dutch Brothers, oh my goodness, absolutely getting hammered. I mean, thrown out of the kitchen. That was whacked down about 38% last I looked, trading close to $21 a share, something like that. They really didn't, they missed on a lot of things, and there was a lot of issues that they had with some of the commodities that they have to use each and every day. Apparently milk being one of those that really stood out, and the prices of milk was one of the areas that people were talking about there as well. Inflation being the behind the scenes call on that. But boy, really, really getting hammered to the downside today. Unbelievable. So I've got two unusuals and we're out of here. I got Macy's. Now, Macy is always interesting, huge short interest. We talk about that all the time. That gives you an opportunity for maybe a short squeeze. Stock was trading right around 2080. We had a buyer of 22,000 of the May 13 call. Now, the interesting thing is they're buying the 22 strike calls. They expire May 13th. Well, today's the 12th. They got today and tomorrow for this to work. But things can happen very, very rapidly in this market. We do know that. 15 cents, 28 cents. The option price for those Macy calls. Can it make that move? Certainly could. It's sitting right there, but it's something that's going to have to play out. And we've got just today and tomorrow, and that is it. So understand, very, very short term here. Now, I got an ETF, Clean Energy, ICLN. We've seen this one before. We're seeing it again. Stock was trading, or ETF, 1680. We had a buyer of 6,000 of the June 17th calls at 80 cents. So these June 17 calls gives you a little bit more time. You're getting all the way out of May into June, full June, and you get the opportunity with the stock trading 1680. It's almost really an at the money call that they're buying. Those are going for about 80 cents. As I said, 6,000 of those trading. If you didn't understand what I'm talking about, make sure you get understanding of the derivatives markets. We know how important they are and how critical it can be, and risk reward. Once you know more about it, you can know how you can navigate through crazy markets like we're seeing right now. But I'll tell you what, nothing is easy, but you do have to have that knowledge. Knowledge is king. Folks, have a great day of trading.